tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
All right. Ooh, it rounded the corners. That's what I was trying to get. There's a new, they pushed out an update that lets you round the corners of pictures and pictures and pictures. Rounded corners? That's what I'm talking about. Let's see if it did this one. Doesn't look round. See if it did this one. Oh, that one's round. That's round as hell. Love it. See, small victories, small victories. It also put out a thing that lets you do night mode. So I'm seeing everything in night mode. That's pretty badass too. So there we go. Night mode, rounded corners, small iterative improvements in life. All right, let's see. So what we'll do, we'll focus mostly on questions today, Q's and A's. I do have some interesting articles. I do. Let me see if I can. I wasn't sure if I should read them, mention them. We had talked about yesterday, there were a lot of people asking, well, not a lot. A few of you were asking about the ETF inflow situation. We also have some Jupiter DEX news. So that's kind of interesting. Let me see if I can. Oh, you know what? Hold on. I think I can pull it up another way. I've got another way to do this. Ooh. Okay, hold on. See if I can do some magic. The Jupiter DEX one is actually that's pretty cool because that has to do with the vote that is just about to end like any minute. Any minute. So there's that one. There's the BTF inflows are seeing over 500 million in the past 2 days. Although today markets are getting kicked in the nuts, but that's fine. This too shall pass. And then the other one I think was Ethereum's complexity impacts the ETH-A ETF growth. This is from BlackRock. So we will talk Which way should we go? We could be democratic and I could let you guys vote on it. But that would probably go nowhere because we know how votes go. Good morning. Good morning. Good morning. All right. Let's do this. Let's talk about what BlackRock had to say. They were saying that ETH is lagging behind IBIT in assets under management due to Ethereum's complex investment narrative. BlackRock's IBIT thrives with 24 billion in assets under management, while ETH holds 1 billion. That's a big difference. Part of it is grayscale. I don't know if they'll mention grayscale because they typically don't crap on each other. But my opinion of this is a grayscale story for the most part and an Ethereum story a little bit. But let's see what BlackRock has to say. So BlackRock's Ethereum ETF, ETHA, that's the one if you were looking in your, to invest in this ETF, you would look for ETHA. So it is significantly underperforming compared to its Bitcoin ETF, IBIT. Now, I think part of that's common sense. I mean, if you look at the market cap of Ethereum, it's not on the same level as Bitcoin. So I don't know why you would assume anything more than that same market cap ratio. But anyway, so BlackRock's head of digital assets acknowledged this at the Messari Mainnet conference in New York. He attributed ETH's slower asset growth to the more complex investment narrative surrounding Ethereum. Launched in July, ETH reached 1 billion in assets under management in about a month, in stark contrast to IBIT's rapid accumulation of 2 billion within 15 days of its January launch. Currently, IBIT, which is the Bitcoin one, boasts 24 billion in assets, while ETH remains at around 1 billion. So, and it got there in like the first month, and it's kind of stayed there. So this guy says that while ETH's slower growth may seem disappointing compared to IBIT, the overall ETF performance tells a different story. Go on. Spot Bitcoin and Ether ETFs. The industry overview is that since the SEC approved spot Bitcoin ETFs in January, the products have reached 61 billion in total assets. BlackRock, Fidelity, ARK Investments have led it, with BlackRock's IBIT pretty far in the lead. The SEC also approved 9 other spot Ether ETFs, with BlackRock, Fidelity, Bitwise, and Invesco launching their own funds. These Ether ETFs have acquired around 7 billion in total assets. Not bad. Not terrible. I mean, it's a billion. So this same dude, Mitch Nick, also expressed concern that Bitcoin's reputation as a risk-off asset is changing. While many see Bitcoin as a risk-on asset closely linked to equities, he argued that unique factors influence its price. He emphasized that Bitcoin's long-term connection with stock is near zero, despite short-term fluctuations. Yeah, and the short-term fluctuations, we've talked about that quite a bit. When everything is selling off, everything is selling off. And if you've got winners on one side of the table and a bunch of losers, especially if you're margined, like all of these dumbass retail investors do, even the smart retail investors margin because they know everything. And why wait for real returns when you can get some leverage? So they're getting their ass kicked on one side of the balance sheet. The stock market sells off. They look over and they're crushing it with their IBIT, their Bitcoin ETF. Of course, they're going to sell it. They're going to sell it. You sell your winners to cover your losers. In true chaos, everything is correlated 1. In a catastrophe, everything's correlated 1. Everything that's not bolted to the floor gets sold. It is what it is. This guy Mitchnick also discussed BlackRock's recent approval for offering options for their Bitcoin ETF, IBIT, stating that this would give investors more flexibility to trade and hedge risks. Now, I think it would be interesting if and when this goes through, if Coinbase makes a play at offering options on Bitcoin and Ethereum. Wouldn't that be interesting? What if Coinbase let you trade options that on Bitcoin or Ethereum, and the Ethereum was staked? I mean, they have the CB ETH, the wrapped weird product that you can get even if you have asset state. So it's not outside of the realm of possibility. I mean, if I was Coinbase, I would want those options premiums. Remember, 90% of options expire worthless. 90%. What does that tell you about all these dumbasses that are like, oh, man, you're going to get rich in options? Not if you're buying them, you're not. Anyway, so there we go. So another bit of news about the ETFs. Bitcoin ETFs see over 500 million inflows in the last 2 days. Well, obviously, we're on the second day of the week. Therefore, this is counting Friday. So on Friday, Bitcoin ETFs recorded a significant inflow of 494.4 million, marking one of the highest single day totals in many months. ARK-B ETF led the charge with 203.1 million in new capital, continuing a strong momentum after a significant inflow on September 26th. Fidelity's FBTC ETF saw 123.6 million, while BlackRock's IBIT contributed 110.8 million. Bitwise added 12.9 million. Grayscale posted 26.2 million in net flows. To read this word for word, you got to be careful because it's not net inflows. That's net flows. So Grayscale, again, might have S the bet. It's hard to say. Minor inflows were seen in Invesco's BTCO, Valkyrie's BRR. No one gives a shit about Valkyrie's anything. VanEck's HODL, which is stupid, which reported around 3.3 million, of course, because HODL is stupid sounding. So come on. Like when you don't take yourself seriously, no one else is going to either. Like at a certain point, like are you guys running a real company? Like what are you guys doing? And actually, I think I can get you this chart. Let me see if it'll come out. Boop. Can you guys see this? See that chart right there? Let me make it bigger for you. I'll make it bigger for you right there. That chart right there. So these are all the funds kind of going across the top. BlackRock is IBIT. Fidelity is FBTC. Bitwise is BITB. BITB. ARK is ARK-B. Invesco, BTCO. Franklin, EZBC. You get it. All right. And then there's Grayskull. By the power of Grayskull. Let me go up a little bit so you can see what the averages are. So these are the totals. These are the averages. Grayscale, funny. Oh, Grayscale with the negatives, huh? Ain't that something? Ain't that just something? So there you go. Great. And you see all these categories where that's a negative. That's a negative. Look at Grayscale. Who is the perpetrator to the greatest extent? Losses. You think people are happy about being in Grayscale? What could be different about them? What could be weird? What could be different about them? So I guess we'll never know. I guess we'll never know what would make Grayscale less interesting to people. There's really no way to tell, is there? It's kind of impossible. Anyway, and remember, GBTC was the trust. BTC is their new, whatever. I don't know what's going on at Grayscale. I don't think they know either. Anyway, Grayscale. Am I right? So that's the story there. It's not super interesting, but for people that were curious about the inflow situation, that is it. I will tell you now about the Ethereum ETF flows. So they followed a similar pattern on September 27th. Total net inflows. I'm going to go ahead and give you that chart because why not? Okay. And let's go. Just real quick. Anybody want to guess which one all these all these reds are? All these deficits are? Anybody want to take a stab at that? Yeah, that's Grayscale again. S-ing the bed. Again. Why? Let's see why. I wonder why. 0.19, 25 basis points, 20, 21, 20, 25, 25, 250 basis points. 250 basis points. 25, 20, 20, 21, 20, 25, 20, 250. Yeah, you get it. Bunch of jackasses at Grayscale. Ugh. Anyway, ETFs followed a similar pattern for Ethereum. On the 27th, inflows reached 58.7 million, led by Fidelity's FETH. It's kind of fun to say. It's fun to say. With 42.5 million in BlackRock's ETH at 11.5 million, Bitwise ETHW, and Invesco's QETH, Keth added 5.4 million and 4.3 million, respectively, while Grayscale's ETH posted outflows of 10.7 million, partially offset by 2.3 million in inflows into their mini fund. So I don't know why their entire fund is not gone. That's just got to be people that don't know the difference, that just don't understand. And again, is 2.5% the end of the world? It's not that much, but it is if you're dealing with a lot of money. It's like 2.5% of a buck is not much. 2.5% of $100. Well, that used to be a cup of coffee. It's not now. I don't even know if that's a pack of gum these days. 2.5% of 100,000. Oh man, that's $2,500. That's like a plane ticket somewhere nice, in that first class, them fancy ass seats. That rotisserie chicken dinner. 2.5% of $1 million is a car. Not a good one, but it's a car. A car. An actual, you have it in your driveway, you can drive around places in it. Car. So 2.5% does matter. Stupid asses at Grayscale. Jesus, man. I still contend that without the fail that is Grayscale, Ethereum would be at about $3,900 right now. Anyway, I know. Whatever. This is just my little theory. On September 30th, Ethereum ETFs faced major outflows on September 30th. So yes, yesterday, totaling less than $1 million, 800,000, which is not much. Why was that? Well, there were 11.8 million from Grayscale, while BlackRock added 11 million. Therefore, Grayscale was the reason yesterday's inflows were negative. Again, negative by $800,000, but 11,800,000 from Grayscale, and ETH, BlackRock's fund, added 11 million. Inflows, the good kind. So there was no other significant activity reported across the other Ethereum ETFs, suggesting a quiet start of the week for institutional players interested in Ethereum-based products. Substantial inflows into Bitcoin ETFs on Friday emphasized continual institutional confidence. Oh, wait. Should I do? I'm going to do strength this time. Ooh, this is exciting. Strength mode. I don't think I've tried this one in a while. Shows a guy sitting down, but he does not look happy. Okay. Here we go. S is about to get real. All right. Monday saw a more tempered market reaction, possibly indicating short-term profit taking or reallocating assets headed into the new week and new month, despite strong flows on Friday, inflows. Ethereum's ETF saw a mixed start on Monday, with Grayscale's outflows continuing to weigh on the overall market sentiment for Ethereum-backed funds and products. Ethereum is getting its ass kicked because of Grayscale. This is a continual, perpetual dick move by the idiots at Grayscale. Here, just more red. Catch you some more red, bro. Get you some more red. So anyway, there we go. Okay, so that's Grayscale for you. I mean, same old, shame old. Shame old, shame old. All right. Get it? Because I said shame. All right. And then in Jupiter news, who here voted? If you own Jupiter, who here voted? Should be a lot of you. Did you vote? I better see some people say they voted. Anyway, you're dumb if you didn't vote. You get paid to vote. You get paid tokens to vote. Anyway, they're going to release the details of the vote. here in a few hours. So Jupiter Dex voting to decide on the Jupiter token reserves is entering its final hours. Here, I'll put a cool little graphic. Ooh, how apropos. The vote to decide on the future of the active staking rewards, which are ASR. When you're reading, you'll see ASR come up. That's active staking rewards program. That vote ends today. The buck stops here, man. The vote to decide the future ends sometime today. Details will be made public. Jupiter attracted more small-scale users with their DCA tools and limit orders, which are two new functions they just added. Jupiter tokens remained around or above 90% during the vote. 90 cents. Well, 90% of a dollar during the vote. 90 cents. Cool. The Jupiter Dex will announce the fate of more than 200 million Jupiter tokens later today based on the result of a community vote. You would say, where did those tokens come from? Those were tokens that were not claimed. They were not claimed. That's tokens that dummies didn't pay attention to. Can you imagine? Can you imagine? Jupiter, the Solana Dex aggregator, is almost at the end of its community vote on the distribution of excess tokens from Jupuary. I love it when we mess with words. The community decision has attracted 299,671,743 total votes as of a few minutes ago. 5 times more than the minimum of 60 of 60. Wait a minute. They got that wrong. They wrote 60,000 votes. I mean, 299 million is way more than 5 times 60,000. So yeah, because that would only be 300,000, and that's off by, a factor of 1,000. So we're not going to trust all of the math in this article. Jupiter is one of the Solana-based products with the strongest emphasis on community decisions, as the platform also distributes 50% of its earnings to the community. We're the community. Woo woo. Anyway, the spare Jupe tokens, JUP is the symbol for the tokens, came from unclaimed airdrop rewards during the Jupuary campaign in early 2024. Who in God's name would leave all those delicious rewards? Around 215 million tokens are at stake, either to be burned. Nope, that's an idiot tool. We're not going to be doing that. Or the tokens will be awarded for active staking and voting. Okay, so that would be a kind of recycling of those tokens. Okay, so that's what they're saying. So they could also return the tokens to the community multi-sig wallet, which would slightly increase the share of rewards based on Jupiter's fees. But I would be betting dollars to donuts that this is going to be all about the ASR rewards. That would be. I mean, I'm not going to ask anybody what they voted, but that's what I voted. I'm trying to look. I'm a material girl, and this is a material world. You know what I'm saying? I'm cold now. I need that new jacket, that puffy new jacket that all these LA douchebags wear. I like how, if you ever come to LA and look at all the LA douchebags, they all have these puffy vests. You know those old school vests with like the little lines in them, and they're puffy, but they're vests only. Oh, my arms don't get cold. My arms don't get cold. Just this part, the cool part of my body, is the only part that gets cold. But my arms don't get cold. So I'm in LA where I don't get cold in the arms. Anyway, I'm not buying one of those jackets. All those douchebags. I would go to movie premieres and you would see all the producers, which people that put in like $16 and they want to act like there's somebody. And then they all wear the same stupid ass jacket. Puffy. Any of you here that have that jacket, throw that crap away. You look like a tool. Because the rest of us see you in public, we're like, you're a tool, dude. Old signaling ass. Anyway, enough about the puffy jacket. The vote, when you look on Jupiter, if you look on in the governance portal where you can vote and stuff, it doesn't reveal the preference of where the votes are going, and that's to avoid attacks and things like that. So the Jupiter team recommended using the tokens for another year of ASR. I like that. Seems good for me. The reward will bring more alignment by encouraging active voting on Jupiter issues. I mean, think about it. When you get paid to vote, makes you want to vote. Can you imagine if they tied some stimulus program to voting? How many people would get out and vote? Like, okay, listen, if you vote in the presidential election, you get $1,000. Everybody that votes gets $1,000. You don't think mofos would get out there and vote? Huh. You dig? Yeah, exactly. Puffy. We don't like puffy. We don't like the word puffy. We don't like those puffy jackets, you douchebag losers. Anyway, the reward will bring more alignment by encouraging voting. And the community is also growing, and there were also calls to boost the available ASR, the active staking reward. So there we go. ASR creates slightly higher potential selling pressure compared to a burn, because with a burn, the tokens would just disappear. However, the Jupiter DEX has distributed several quarterly ASR installments while retaining a price close to $1. While enjoying several rallies in the past year, ASR tokens are also held for a cooldown period right after each of the releases of the tokens. They lock the tokens up for 30 days. And that probably keeps that knee-jerk reaction of people to sell. Although you could just look at the tokens you have locked up and sell that same amount in your portfolio and achieve, the same thing. But there you go. In October, there will be another ASR event to redistribute tokens. So if the vote is in favor of using the spare jupe, the non-claim jupe, there will be even more events extending into 2025. Amazing. You say, okay, well, where is Jupiter getting all of its activity right now? Well, it is attracting small traders, gamblers, the Solana types. Listen, I might not like them, but I'm sure going to take their dollars. The Jupiter DEX aggregator mostly relies on Radium, Meteora, and Orca. With a constant flux for smaller Solana markets. At the end of September, Jupiter saw a prevalence of orders under the $100 mark, driven by a spike in Radium DEX activity. Jupiter continues to draw traffic from the launch of new and highly active Solana meme coins, the dumbest of the dumbest of the dumbest, like in the world. They're so dumb, they're not even in crypto. They're in Solana meme coins. That ain't crypto. Anyway, the aggregator carried out more than 1.7 million trades under $100 in the week ending September 23rd. The inflow of small-scale traders happened after Jupiter introduced dollar cost averaging orders, which is kind of cool. At the end of September, the aggregator also added limit orders straight from the app, which is cool. During the same time period, in-person trading also increased as traders managed to compete with bot-driven traffic. Jupiter has already hosted more than 13 million trading wallets with more than 599,000 swaps completed. In the past month, revenue generated from these fees for Jupiter, but the aggregator still manages to achieve up to $1.5 million weekly. So they didn't make as much over the last month because their fees have been reduced, but they're still racking up 1.5 million a week. Fees and their redistribution are one of the main points for community votes, hence the requirement to hold Jupiter, stake, and get involved in the ecosystem. Woo-woo! So I think that's cool. They are expanding their DEX value lock. They've hit a new record. So Jupiter locks its own liquidity. It recently reached a record of 1.26 billion. The value locked already exceeds the project's total market cap of 1.21 billion, meaning that at least right now, the tokens are undervalued. Well, I guess they're underpriced marginally, but they are slightly underpriced. More than 377 million tokens are locked and used in active staking, accruing another 50 million Jupe rewards for the last quarter. Based on this ASR schedule, the spare Jupiter that are currently voted on can supply the ecosystem for another year of quarterly rewards. So that's what they've already got locked. So you're going to get rewards for another year no matter what. Now we're voting on what happens after that. Jupe may feel some pressure from the presence of unlocked tokens. Currently, 66.11% of the tokens are fully unlocked, meaning 66% of the flow of the tokens are out there. After February 2025, so here in so many months, Jupiter unlocks will accelerate and the team allocation will be released gradually. The market expects to absorb up to 10 billion tokens in total, of which 1.3 billion are currently in circulation. So keep that in mind. This market will eventually eat 10 billion and a little over 1 billion are out there. So, there may be a point where it makes sense to take your original investment off the table. And I think that is, if you can grab a 2x with this thing, I think, again, there's the behavior of Solana is inconsistent at best. Crashes a lot, still crashing a lot, to the point where it's like I don't know if there's been a day of consistent uptime ever. Anyway, so while I like Jupiter, I don't like Solana still. I don't think Solana is a quality asset. By just about every way you measure something. Now, is it a good investment? Probably not. Is it a good trade? Well, you have to say it's a good trade. It's made people money. So I'm not a hater on that. Anything that makes you money, great. It's building your portfolio. But do not be surprised if you wake up one day and it's down, it's shut off again. And then start to think, oh, wait, would anybody in the real business world trust a platform that's shut down, that's broken more than a fax machine, like on a daily basis? Oh, well, we're out of whatever it is in the fax machine that does whatever faxes do. We're out of that. Fax goo. Faxium. The Faxium solvent has run a dry. It has run a dry. Anyway, so there's a lot more tokens coming. Voting on the extra 200 million to be burned will have a limited effect. I mean, so that's why the whole point of token burns are stupid. It's not going to make a difference anyway. So you might as well just shower them onto society and create more value. ASR tokens also are not sold immediately, again, because they lock up for a 30-day cooling period after they're distributed. So here we go. I'm curious to see how this all goes down today, but I would assume that the ASR vote goes through and not the burn one. Jupiter peaked, by the way, at $1.80 during the March craziness. And I guess that was, we can actually go back and look at that. Why don't we go look at that? Why don't we go and look at that? What was going on in that market right there? Oh, of course it locked me out. Give me un momentito. Give me un momentito to log in. Log in, sucker. See what you got. All right, now we have to go to our previously scheduled program. Ooh, look, it did it right. Okay, cool. So the market taking a bit of a pounding. Well, it's a bit. It's down over the last week, less than 1%. So it's flat. Listen, things were going great. It kind of stagnated at that 66,000. It didn't quite push past 66,000. So it's down a little bit today. So what? Ethereum down a little bit more today, down in the week about 3. So basically Ethereum gave up its gains just this week, just like today. So today is what wiped out last week, but still up on the month a little bit. XRP, no one cares. No one cares about their crappy stable coin. It's not going to change anything. These dudes just want to get in. All these guys want to get into stable coins because they want free money to invest. They basically want you to give them their money. So, and you can print it out of thin air because there's no checks and balances going on. No one's looking at the books on any of these companies, apparently, especially like Tether. No one cares. Like, no one cares that all this stuff is scammy. No one cares. So, and even Gary Gensler doesn't care. Look at how easy would it be to go after Tether and just say, oh, we're just going to perform an audit. How about just an actual audit? That's how you know that Tether got in bed with the U.S. government at some level. They cut some deal, some info sharing, something, because none of those dudes went to jail. They just all got indicted. They got slapped on the wrist, little fines. They've run the biggest Ponzi counterfeiting scheme ever, and no one cares. Oh, it's only 110 billion out of thin air. There's no money. I mean, there's money now because they used the fake money to buy Bitcoin. So now they're Bitcoin rich, but there's still no money. There are no dollars. What a scam. No one cares. Anyway, let's look at Jupiter, because that's what we're going to look at. How has Jupiter performed? Well, today it's down about 6%. It's up on the week. So a little fractional amount of tokens, whether they started doing token burns or whatever, that's not going to change anything. So yeah, there we go. So we're down 5%, which, a few pennies. But if you look at the behavior of this guy, let's go out 12 months. You're going to see a big pop right around March once we get past the spinning wheel here. Bam! Look at that. Mid-March to early April. That was the peak. $1.72, and it said there was an intraday peak of 180. But $1.72, what the smoke? So we're not there yet. But I would urge, I don't know what everybody's entry is. That's on you. But I would pay attention to these things. And, I like Jupiter. But man, Jupiter relies a lot on Solana. It relies 100% on Solana. And Solana is a douche factory. And it caters the weakest, sloppiest, most unintelligent investors on the planet. They're not really investors, gamblers. So, it doesn't take a genius to math out where that's going to go. But I do like that Jupiter's starting to expand and probably go into other assets and other networks, things like that. I see a future where they're not specifically Solana aggregators. So that would be good. You'd think that these douchebags would call them, the guys at Algorand. They don't have anything going on. They've got some spare time on their hands. So anyway, there you go. Let's look at the markets. That's the inflow news. The inflow news, we has it. Okay. If there was anybody that had any, yeah. Let's see. Are there any crypto related questions? Does anybody even care? Yeah, there you go. So that's what's going on in the crypto world. That's what's going on in prices. Nothing too dramatic. We had a good September. People were bound to take some profit, clean out some books, things like that. To which I say good. People should be allowed to take profits without feeling bad. I wonder where my my optimism. 176. It's down 14 cents. Where would I get back to it? Stagflation update. Who knows? I did think it was funny. Anybody listen to Powell's blasphemy and nonsense, where he still claims, again, he doesn't believe this, but he claims that the economy's in a great place. The job market's good. Everything's fine. They're just being cautious is all. They weren't behind the curve. They're just being cautious. No big deal. Probably another 25 basis cut in November. Probably another 25-point basis cut after that. Just to round out the year. But nothing crazy. He doesn't really see anything that would make him do another 50 basis point cut. To which I reply, bull crap. Then they got, and it's like as he was speaking, a lot of the data from the automakers was coming in, which is bad, like bad. A bunch of companies are sitting on a bunch of inventory that they can't move. Bad. A bunch of companies are going to have to start layoffs. Bad. A bunch of companies are going to have to cut production, which will also increase layoffs. Bad and bad. It was really bad. And you could go look at those numbers, but a lot of big automakers are sitting on, and we talked about this a few days ago, didn't we? That Ferrari is sitting on more inventory than they've ever has been in recorded inventory history. They're sitting on a bigger percentage of inventory based on their total vehicles that they produce than ever. Meaning, if you want to get you a Ferrari, it's about to be you'll be able to get one, and you won't be paying over sticker either. Like they're offering us one right now, an SF90, and the sticker is $714, and I think they're offering it to us for $640 something, $642 or something. Think about that on a Ferrari. $80K below sticker on a Ferrari, and it's a wicked one too. It's a SF90. It's a spaceship. Only thing is the doors open normal. Okay. The dock strike. I don't think there's any effects of the dock strike other than general macro effects of people are uncomfortable, people feel weird, people are not investing. I don't think dock strikes are directly affecting crypto. And you always should keep in mind that crypto is tiny right now. Tiny. Still 2.2 trillion. Tiny. Gold is 16. Gold is 16. Let's see. Been buying Matic for months under 40 on Coinbase. Now it says I cannot transfer or send it off of Coinbase from my state. Okay. I mean, do you want to sell it or move it? Do you need to move it? Like, what do you need to move it for? Are you doing something with it? Do you have some plan for Matic? Some Matic plan, Howard? Like, how does this hurt you? How have you been wronged? Point to me on the doll where the bad exchange touched you. So yeah, move it to stake. Stake it where and for what? Matic doesn't pay shit. I don't know. To me, it's not that interesting. I mean, these assets move so fast that 3, 4, 5% staking, unless it's super easy, I'm not doing it. I'm just not messing with it. Can't you stake right there on Coinbase? Don't they pay you like 3% on it? Let me see, Howard. Let's see if you're just going all crazy chasing a few percentage points. Let's see. Polygon staked. Yeah, staked at Coinbase. And it's paying 3.76%. 3.76%. Transactions, Matic reward. What are these rewards? Let me see. Ooh, look at me getting rewards at 3.76%. Woo woo. Anyway, yeah, that's what's going on there. I would leave it staked. You're getting almost 4%. And the rewards are, it's 4%, but you're getting paid like every other day. What's the point? It's not staking at all. They don't have any staking. I still don't think that's worth it to move it around, to sell it, and all this kind of, not worth it. 5% is nothing. It's dust, unless it's a lot. Howard, if you have millions of dollars in there, then I see why you're so frustrated. In which case, sell it and move it. But you better put it somewhere where you feel like it's safe. Don't put it in some sketch ass place, and chasing 5%, you threw it all away. You will not be happy, bro. Not be happy. What is Cybro? No clue. I've seen it referenced a few times. I don't have a clue. Google it. Give it a chat GPT it. GPT it. Google it. Googling doesn't do crap anymore. GPT it. Let's see. Massive layoffs in healthcare, ports, banks, Disney, Microsoft, Allstate, and the state of our economy. Yeah, except that, Catherine, Jerome yesterday said everything was fine. Matter of fact, healthy. He said it was healthy. Healthy economy, strong jobs market. What? You're like, what are these guys reading? Strong jobs market. Everything is good. Everything is fine. Oh, all the shit's burning. Everything's good, man. Ooh, that's the kind of steak you can eat, Rudy. I like your style, buddy. Okay. So there we are. I do not think the economy is good, but on the other side of it, we're not in a depression. We're in a recession. Recessions are healthy. And by the time they admit we're in a recession, we're on our way out of a recession. And you know what they do to get us out of a recession these days? Easing and rate cuts, which don't do anything, and stimulus, which does do things if they do the stimulus in a way where you have direct transfer payments, which don't think that's beyond the realm of possibility. It's election year. All sorts of shenanigans could be done. There you go. Yeesh. Yeah. And, you know, we have like a little Middle Eastern war brewing. So there's also that. Yeah. Oh, also, like one of my friends might end up being the president of Lebanon. Crazy times, am I right? All right. Well, the printer don't go burr yet. The printer don't go nothing. Actually, it's funny, Hero. The printer does, but in a different way, through debt creation and credit extension and credit creation, all that, and through non-judicial review stuff that just quietly gets pushed through Congress and just becomes law, and all this money, government money, starts going places. Money that doesn't, by the way, exist. Money that they create into existence for these weird things that no one even votes on. NJR. Look it up. Non-judicial review. It's like a whole thing. God. Anyway, oh, you know who does know about it? Nancy Pelosi and her husband, apparently. And they just always seem to invest just at the right time. Anyway, good for them. Cheating within the rules. Thieving within the rules. Doing the same thing that people would go to prison for an entire career. And they don't at all feel bad about it. Yeah, NJR is scummy. So you are right. The printer does go burr, but not in the way that people think. People think that they're printing money into the economy through quantitative easing. No. That they're the money printer is going off when they lower interest rates. No. That doesn't even there's not even a bad argument for that. There's just no argument for that. And yet that in people's minds that like, oh, lower interest rates, that's a form of easing. Oh my God. But all of this it reduces back to what would WWBD, what would banks do? When a bank is in a recessionary environment, like right now, you go to a bank, oh man, I got an idea, I want money. They're going to tell you to kick flipping rocks. Get on down the road with your idea. Oh, crap. Yeah, but interest rates are lower, man. Yeah, well, we're not giving you money, man, because we think your idea for a test market company for couch insurance is stupid. You're not getting the money. Beat it. So banks are the real central banks. Banks lend into society or don't. When banks step back, that's when things collapse. And that's where we're at. Banks are not lending. People are not buying. They're not buying cars. They're not buying gas. They're not buying the government's BS. If you look at the sentiment surveys, I'm not buying. So that's what's happening. But the cool thing is that once you get to the point where everybody admits we're in a recession, we're on the way out of one. It's like being halfway through a forest. Well, you're also halfway out of the forest. Good. These are healthy too. Normally, when we don't paper over our problems, normally these downturns in the economy are actually quite beneficial because it gets rid of bad business and poorly invested currency units, and those assets end up in the hands of more competent fiduciaries and more responsible, or at least more seasoned investors, we would hope. And off we go. I look at the members of Congress who went in with less than 200K in net worth. 2 years later, multimillionaires. I know, it's crazy, right? I guess that in Congress, they talk about investing a lot, and they're just really good. They're really competent at investing. They just really learn. That's really where you go to learn about investing. You go to Congress and you're like, okay, I'm a senator now. I'm a congressman now. Who's going to teach me about investment? And then there's like that one guy, I guess, that guy with that coat. And you're like, dear God, please don't pull that coat open to reveal a naked, old, creepy man that looks like an Australian bat. Please leave that jacket closed. And he's like, I'm not here for that. You're like, oh, thank God. I'm going to make you investment money. I'm going to teach you how to invest. Like, cool. What's step one? Oh, just do what Nancy do based on insider proprietary information that they voted on. Oh, it's that kind of thing. Oh, so this is basically just glorified insider trading. No, it's actual insider trading. It's not glorified. It is actual insider trading. Would be illegal and felonious as flip anywhere else. But here, you get a car, and you get a car, and you get a car. Mr. and Mrs. Pelosi. And there you go. So I would say let us keep digging into assets that we can understand. And did you guys think about yesterday, your portfolios, the 3 assets that you wouldn't mind perhaps trading around a little bit in these kind of crazy times? We'll talk more about that tomorrow. Behind the Wall on Digital Investor. Yes, we do that. Behind the Wall. Stay safe. Stay in school. Don't do anything my poor, insolvent, drunk, strung out on meth grandmother would not do, which is very little. Brandon should be back. I don't know how long his trip is. In a month? 2 months? I don't know. But he did text me the other night. So I know he, at least as of yesterday, he didn't get eaten by animals. So, yeah, maybe he's back. Maybe not. We shall endure. And on that note, I must bid you a fond adieu. We will see you tomorrow.
If you're an accredited investor and you want in on angel, seed round, or early round equity and token opportunities in the artificial intelligence and cryptocurrency space, schedule an interview at nickblacknext.com. In life, you can either be really good, really lucky, or just be first. Being first is so much easier. Schedule a digital private client interview today at nickblacknext.com.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish.